Well, for more on these growing tensions between the two largest economies in the world, we're joined now by Ronce Almond, a trading expert and partner at the Wicks Group, a law firm based in Washington, D.C. I guess the first question has to be, who's driving the Trump tariff train today? Because Steve Mnuchin just a few days ago said trade war on hold. Peter Navarro saying unfortunate statement by Mnuchin. It just seems like there's this war within the administration. Who's got the president's ear from day to day?
Well, that is one of the major questions here in Washington, I'm sure in Beijing as well. You know, Isaiah Berlin, a 20th century philosopher, said the world can be divided into foxes and hedgehogs. Foxes know many things, some of them contradictory. Hedgehogs know one big thing. I think in regards to trade negotiations, you see a den of foxes, his cabinet, his administration chasing a hedgehog, Donald Trump looking for a deal. Now, you know, as you just said, we have Steve Mnuchin saying one thing one day, the Treasury Secretary. Then you have Robert Lighthizer, the USTR, the trade representatives, contradicting him. We heard about screaming matches in Beijing earlier this month. So there's a lot of contradictions. There's a lot of fluidity in this negotiation. It's quite frankly confusing.
How do you negotiate when you don't really know who you're negotiating with? Because Mnuchin's saying one thing one day, Wilbur Ross may say something entirely different. And what's going to be the response when he gets to Beijing? He's going to be on his way. He'll be there in just a couple of days. What's going to be the response from China, do you think?
If I were Wilbur Ross, if I was the Commerce Secretary, I would expect a frosty reception when I got to Beijing. I mean, quite frankly, because the so-called moratorium truce only lasted, almost a week or a little bit more than a week. They must have been surprised to receive that announcement by the president and the White House that they're going to go forward with these tariffs after the vice premier came and had this announcement that the parties had agreed not to issue and raise new tariffs. So I'm not sure that the negotiations will be that fruitful, quite frankly, if the president, Donald Trump, and the White House cannot be relied upon. There's reputational damage to this type of zigzagging in their negotiation posture.
Well, and then the other question is, I guess if you're on the other end, do you think he's bluffing? Because you're hearing all these different things. I don't know. Let me ask you this, though. A Trump advisor, a former advisor to Trump, I heard him interviewed yesterday. He said a lot of countries say free trade, but they're not free traders, and this administration's had it, and they're drawing a line in the sand. They want to go with the Reagan playbook, who also had tariffs while he was in office. I went back and read up on this. The World Bank came up with an estimate on the import restrictions in 1984. It determined the net effect was a 66% increase tax surcharge on the poorest citizens in the United States. Trump himself has talked about the forgotten ones. Those are the ones that are going to suffer from this, aren't they?
Well, it's interesting enough that you point out the statistics from the 1980s, because it's now the 2010s, and the Wall Street Journal, the Peterson Institute for Economics, agree with you. I mean, agree with those findings. There was a poll today the Wall Street Journal issued. They went and polled manufacturing executives. 74% of them expected these tariffs to raise costs for U.S. consumers. Nearly 60% expected these tariffs to disrupt supply chains. The price increases could be anywhere between 5% and 6% on goods, manufactured or non-manufactured goods. But the bottom line is there will be price increases, and that will fall upon the U.S. consumer, a lot of them in the lowest rung of the global economy, and the U.S. economy in particular.
This protectionist stand, it's not just China on the receiving end, of course, the EU and neighbors, Mexico and Canada. And the question has to come up at some point. When do these countries look for other partners and just walk away from the United States? Or when do they become more self-reliant? And isn't that, in a sense, self-defeating, that you're going out and attacking, where people have to go somewhere else?
It's a great point that you raised, because this type of attack, these type of tariffs, the restrictions on trade, whether it's people to people or goods and services, really, these are 20th century tools aimed at a 21st century economy, where supply chains extend past national boundaries, where something that's designed by Apple in Silicon Valley, where that intellectual property is developed, is then produced in a lower cost place like, say, China, but other places where those supply chains move back and forth. I mean, we saw that the president is relying on these tariffs potentially with automobiles. Well, that's going to hurt Europe. It's going to hurt Canada, Mexico, its biggest trading partners. And where are they, like you just said, where are they going to turn to if they can't rely on the United States to be a reliable trade partner?
It's an interesting question. We don't know the answers, but Ron, it's always a pleasure having you on the broadcast, and I suspect you'll be back, because this is a story that's not going away.